What's up, Startup Grind Kelowna? If you need accounting and finance advice and services, you're going to love the interview I got going today with one of the main sponsors of our first event, hopefully many more events, Xen Accounting, which I've had a long history with as a business owner. I've used them for as long as I can remember. I think literally Parkbench, my company, my tech startup, used them from day one. And I've had lots of ups and downs as a company, and they've always been able to help out and scale up and scale down accordingly. They've saved me hundreds of thousands of dollars of taxes. I was wondering if I even got into the millions in terms of the savings I've had from them. So I'm really excited for you guys to get to know them and learn about some of the tricks of the trade and the best practices, some of the mistakes that startups and founders and business owners make, because cash is king. You need cash to run your business. So you need to learn enough about accounting and finance and taxes so that you can raise money and be profitable and flex your dollar as far as you can go. And I'm really excited for you guys to get to know Xen Accounting like me, because this is the first time I've actually met any one of them in person, because they're a fully remote accounting software firm. So I've been in Toronto, they're in Montreal. I've now moved out west, they're still in Montreal, and I've just talked over Zoom the entire time for like 10 years. So this is going to be really fun for me to get to know, how do I call you guys, the owners or principals of Xen Accounting? What do you,
Partners,
partners?
Yeah.
Is that what you guys call each other?
Yeah, sure.
So Joey Stebbin and Hassan Shaharar. Did I get that correctly?
Yeah, you did.
Shaharar?
Yeah.
Wicked. So before I let them introduce yourselves, I wanted to go into like my story with Xen Accounting. So when I first started my startup, I got Wave Accounting app because I was looking for some free software to do accounting for this new startup I have, and they had this little program that says "Talk to an Accountant." And so I'm excited for them to talk about the story of this whole accounting firm, because I talked to this guy named Ryan Lazanis, who had started the firm. And after I met with him and got to talk to a CA, he was like, I can just like do some of this work for you, so you don't have to spend time doing it. And I'm like, yes, please, because I know it's really important, but I don't want to spend time doing it. And so I started my relationship with them. And then, I think you guys will correct me if the story is wrong, they then got bought at some point by a really big accounting firm. And then Joey and Hassan now have recently bought the firm back. And so that's a really cool thing I'm excited to learn about. And I'm so sure you will as well. And so throughout that whole journey, what I was saying was, one, I never met them in person, which I thought was kind of funny. I've never met accountants in person. But number two, changes of ownership, changes of staff, like, and being bought and then buying it back, yet I have not felt any of that.
That's good.
As a customer. So I know that that's like, as things change in your company, like your customers sometimes feel the changes. I've actually never felt, some different names in the email threads.
Yeah.
But other than that, like, it's been really smooth, and so I thought that was really amazing. I commend you guys for doing that.
Thank you. Good. Awesome.
So I would love for you guys to introduce yourselves to the Startup Grind community and let people know kind of the story and the evolution of Xen Accounting.
Cool. You want to?
Yeah, I guess I'll kick it off. Nice to meet everybody. Nice to see you in person, Grant. So I'm Hassan, partner at Xen Accounting, and I guess one of the original members of Xen back in the days. I started in around 2016-17, and my first client was actually you.
Mm-hmm.
Third day, I remember, I was working on Parkbench, and I used to deal with Gerardo. I'm not sure if he's
still with us. Yeah,
amazing. So Chewy, I think is what.
So just to give you context, he's like my director of operations, executive assistant, right-hand person from like day one. And so eventually I can't even, you as an owner, you don't want to maybe even directly interlay or do all the bookkeeping and receipt tasks or accounts receivable. So eventually, hopefully you have someone on your team do this, and that's Gerardo.
Right. So Parkbench was actually the first client I worked on. So I joined the team, and obviously Ryan hired me back then, and we were, scaling up to the point where we needed a director of operations, and a year later is when Joey
Yeah.
Joey joined as the team lead. And then I guess I'll pass it on to you, Joey, to kind of take it
Hey
on from
everyone, I'm Joey. So as Hassan mentioned, I joined Xen Accounting back in 2017. I'd come out fresh from a controllership role. Ryan needed somebody as his, what I'll call his right-hand man, sort of director of operations there to make sure that everything was running smoothly on the ops side. Parkbench, coincidentally, was also one of my first clients because what Ryan did was always make people understand the different processes and give everyone a client to free. So I worked on Parkbench for a while, which was cool. And eventually, 2018, Ryan decided to exit, and we got bought by a major international group, and that's when I took over as the managing director. And I guess I spent 2 years in that role, and I decided that I wanted to experience something different from the outside. And then we talk about smooth transitions. I recommended Hassan for the role to take over from me. And that's when he hopped back in to run the business. And I mean, we can talk a little bit about what he did.
Yeah, absolutely. Well, I mean, as changes happened, the core team kind of still stayed in place, so it didn't really impact the clients too much. Yeah, and then I basically took on the reins. I had a very good relationship with Joey, so trying to spearhead the firm from call it a leadership role versus client services. So getting back to the basics of what Xen made Xen, which was essentially alleviating pain points for startups. So getting back to that purpose really, and then the international group that we were part of, they themselves got acquired subsequently as well within the last year, and then they had their own agenda, so they were focusing on specific jurisdictions they were in because it's an international group. And there was an opportunity to buy back the business, and I reached out to Joey naturally because we've had very good working relationships. We have similar values, similar personalities, and then the rest is history, and here we are today.
Yeah.
Okay, yeah, no, congratulations. That must have been a cool transaction to be a part of in your life, to buy back the firm.
Cool.
And,
very cool.
And how is it different now than it was as a part of the big firm? And maybe even like the experience, like your abilities to provide whatever you like to the client. How has that changed? Because now you guys own it again versus
I mean,
firm.
we may have similar opinions. I mean, from my end, we're trying to focus a little bit more on relationships and get back to, I don't want to call it old school, but with Ryan, shout out to Ryan, who mentored me for 6 months while I was taking over, but we want to do a little bit of a hybrid. So we didn't do that before. So in-person events similar to what we're doing now, going to visit clients and all that sort of stuff. I think that's a little bit different, and what we want to continue doing that. I don't know if you have any.
No, I mean, again, getting back to basics, really alleviating the same pain points, because I think the problem still exists today. Accounting, streamlining the accounting function, getting people the right processes and systems, and just being ready to tackle being an owner of a startup or a new venture. I think that problem still exists, even though it's been 10 years we've been in business. But cloud accounting, or just the accounting industry hasn't evolved much in the last 100 years. It's only in the last 20 years I would say like there has been some changes. So.
Well, one of the things that I thought was cool with Ryan, I hadn't seen before, because like when you hear of accountants, right? So any business owner, you hear like, I'm going to work with an accountant. It's either per hour, or there's just lump sum payments based on the tasks that have to get done, like quarterly returns, annual returns, an audit, or whatever. And if you have anything in between, and for monthly, then you're just kind of paying this like lump sum depending on the amount.
Yeah.
And then Ryan was like, I'm just going to charge like a monthly retainer. It's just going to be a flat monthly fee.
Yeah.
Which then is usually better for cash flow for the business owner versus then having to make sure I save and come up with enough at the end of the year to cover all these expenses. is that like become a thing in the accounting industry? And like, why does Zen do it that way? And why maybe, is it a benefit to startups?
I mean, we're all about value-based pricing, so the fixed price, and we're trying to drive value by transforming your business. You can't really do that. I mean, there's arguments within the industry of what you can provide in terms of value by charging on an hourly basis, right? So if I'm charging you for my time, I want to maximize my revenue and my profits, so I'm going to charge you as much as I possibly can. Whereas implementing a fixed price for a defined level of scope and service, you know what you're getting, you know what the result is going to be, and you know how much you're going to spend, right? That way, there's no call it inherent bias to charge more. We have to deliver that result, right, based off of the scope that we've defined. So a lot more firms are migrating towards that model, but there's also a lot of hybrid where a little bit of hourly here, a little bit of maybe a lump price for onboarding, out of scope work and all that sort of stuff. But we try and really do what we've set out to do from the beginning is, here's what we're going to do, this is the value that we're going to tack on, and you know what the result is going to be, and we're going to stick to our guns. We're not changing that anytime. So yeah.
The other thing that I found was interesting, and how you define you guys as an accounting firm. So when I first got started, it was like, all right, Grant, you just need this much service, so you're just paying this much per month.
Yeah.
Now that my business has grown and scaled,
Yeah.
I'm now paying much more per month and getting much more from it. I also even myself been like, well, what else is there? What other tiers? So would you guys just call yourselves full service? Is there anything that you don't do with regards to accounting services for startups?
Yeah, absolutely. So we definitely are full service in a sense that we can service startups from A to Z. Call it from bookkeeping to compliance, so end to end, right?
Finance as a service is what we like to call it.
Or accounting as a service. Regardless of what you call it, yes, we are a one-stop shop. But specific things we do not do are, for example, like reviews, review engagements, or assurance engagements. Like, we're not auditors.
Right.
So there's a reason for that, though, right? Because we're able to act as the internal finance function during the year, and then as the internal accounting team during the year, and the external accounting team at the end of the year. Because in a compilation, you don't have to be independent. You just have to disclose that you do the bookkeeping. And that allows us to have a really integrated point of view, help the business owner, because at the end of the day, what we're aiming to do is help, right? Help scale, help grow, help transform. So, being fully integrated inside the business as much as possible on a plan that is specific to the business at that point in time is super important for us. So it allows us to be really integrated inside the business during the year and at the end of the year. So sorry to interject, but
no worries. But yes, we are a full service firm, but there are specific, call it specialty services we don't offer. For example, if you're going through an M&A, you might need some business valuation, so we don't do that.
Audits.
Audits, we don't do that. Estate planning, succession planning, we don't do any of that. It's really catered towards mostly helping startups scale.
Yeah. So how early do you think? Because I got in really early, and I was just reflecting on like, okay, so a bunch of people who will watch this don't have a startup and are thinking about starting their own business, or they just got started with their startup. And what point should they start getting accounting services or work? And is it a bookkeeper? Is it an accounting service? What is like the starting point, and when should people start looking into it?
I think we have to differentiate by what type of company, what industry, right? We're obviously biased, but the right answer is right away to get an accountant. And the reason there's a few different reasons. One, from a compliance standpoint, there's sales tax, payroll tax, corporate tax, all that stuff. You need an accountant to do that, right? But in the more day-to-day functionality, and there's bookkeeping, and that is the foundation of all decision making. So we were speaking earlier about how not necessarily everyone appreciates how important bookkeeping is, but all of that information goes into all of the different reports and KPIs and everything that the higher level people analyze. So if you don't have good, solid bookkeeping from the get-go, you may make a bad decision along the way. So now, some business owners like to do their own bookkeeping, right? Most don't. but it better be solid if you're doing it, because what happens if you add a zero or something along those lines, and then you make a decision based off the information that's being spit out? Well, you might run out of money, right? So I always recommend right from the get-go, and accounting problems tend to snowball, right? So the longer you wait, the more procrastination there tends to be, because you're like, oh, I have to tackle this massive problem and da 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 da. Bang it out, get it done right away, and yeah, that's
So
really
I'd like to think that was probably one of the smarter decisions I made. Was like, I don't know if it came out of sheer laziness and the fact that like I'm relentless about like I don't want to spend my time on things that someone else can do who's better at it than me.
Mm-hmm.
I need to focus on growing the company. I need to focus on sales and making money and marketing and just all that stuff.
Yeah.
So yeah, I got an accountant super early, and I'm wondering if that is the best advice to then tell someone, is like, hey, if you're starting a business, make sure you get your legal and accounting set up so that you don't, and then that relationship, like, I wonder if I'm an anomaly having been with an accounting firm for like 10 years through the business. Like, do people change accountants throughout, every 2, 3, 5 years?
There's so many different types
Yeah.
of client profiles. The yes and no, right? So first of all, to go back to your first question, is you did absolutely the right thing. A business owner should be focused on. I like to break it down into past, present, and future. And what we do is we handle the past and a little bit of the present. And if you scale up, we'll help you with your future, right?
Mm-hmm.
But you shouldn't be taking care of stuff that's happening in the past. You should be focusing on growth and scale and all that sort of stuff. So you 100% did the right thing.
Mm-hmm.
In terms of switching accountants, there's so many types of different client profiles. Some businesses like to find the cheapest service out there, right? And that's all that matters. So you'll have people who say, well, you've increased my price, I'm out. Right, but then you'll have people who, like you, who stick along the way, and we're essentially, right next to you in terms of the office.
Yeah.
We are your finance department, and you start small, and we grow with you, and then we layer on top. So you didn't always have the budgeting and the forecasting and all that service, right? So you stick with us along the way. So I think we have pretty good lifetime value.
The thing that you were saying earlier that I value the most is that when we've been audited, when we're going through the review engagements, right? Because if you raise money or get lenders, they're gonna maybe ask you to get reviewed financial statements, audited financial statements, and you guys pretty much do a lot of the communication with CRA, with the auditors, with the review people. So I just, again, don't have to think about it. And I'm just going to focus on what I enjoy doing and what I need to do, which is the business side.
That's really what we're all about, right? Taking the pain away.
Yeah, exactly. Because we're your external, accounting or finance department, and we're, in the business every day. We know exactly what's going on. So when a review or an audit comes up, we know exactly how to handle it, exactly how to address it. We've dealt with this countless times, so we want to take away that stress of, oh, I'm getting audited from the government or auditors in general, or even investors trying to get more information on the financial statements. So we're able to take away that stress, so that, like you said, you can focus on revenue generating items. So.
Yeah.
All right, so I want to get into best practices and stuff for people at various different stages of the business. So let's think about the person who wants to start.
Okay.
One is, start building a relationship. What should go through their mind as to figuring out what type of accounting service they should get? Should they work with someone face to face? Can it be remote? Is there any disadvantage or advantage?
I mean, the gaps have closed tremendously over the years, right? Because of Zoom and Google Meet and all that sort of stuff. I don't see a benefit of having an in-person versus a virtual firm. I feel like we made it so seamless. It's almost the exact same thing, unless you really like spending time face to face.
Then what would if a person was trying to plan and project? Here's like my starting expenses for accounting. I remember it was like yeah, a couple hundred, few $100 a month.
Yeah.
What is it now?
Again, I mean, we do the 3-tier packaging with different levels of scope and services that are available in each one of those. But yeah, it can, it starts from what?
Well, like I said, it's dependent on the business
Yeah.
itself, but our pricing encompasses startups that just started, whether you're funded or not funded.
Yeah.
We do have budgets that work with every type of startup. I will say that our lowest tier plan is a low maintenance plan. You still get what you need in terms of compliance and making sure that somebody has your back.
And
Yeah.
the bookkeeping is done, and
Correct.
we do even with our lowest plan, we take a proactive approach. So we'll talk to you at the midpoint of the year. You've been on these calls
Yeah.
before, where we'll come with the historical financials, a little bit of insight. But again, that's super basic, right? So yes, a few $100 is fair to say.
Yeah.
But we customize everything based off of all the information we collect during the discovery
Because
calls and all that.
when you're a startup and then you start your business, you're like, I got a plan, I got a project, I got a forecast.
Yeah.
And accounting isn't a flat fee 3 or 5 year projection.
Right.
And so like if someone wants to try to proxy like, okay, here's how my accounting fee should grow over time with my company, how would you educate them how to like plan that?
I mean, high level for me, at least from my experience, you go between 1.5 to 2.5% of I believe it was revenue.
Correct. So in FP&A, financial planning and analysis, usually it's about 3%. So you're not too far away, but it's about 3% of top line.
Yeah.
Right, that's good. Now, I was reflecting back on why I think haven't been that stressed out about accounting, and I was like, wow, this is where business school came in handy.
Yeah.
Like going to business school, taking an accounting class, looking at financials. I know actually some of the fundamentals and basics of it,
Yeah.
and so I was able to even get started, know what kind of questions to ask, what I kind of needed help with, and then it just made it easier even to communicate with you guys and think about my business with you with respect to finance and accounting because of that. There's a whole bunch of people that didn't go to business school who want to start a business. How do you think someone should learn the fundamentals of entrepreneurial finance so that they can not just say, hey, just do it for me, but be a part of like the thinking and planning and strategy process?
There's so much information out there right now for financial literacy. I learn every day as well. I mean, LinkedIn is a good place to start if you look in the right places. But I also, if you do end up speaking or partnering with an accountant, ask questions, because you'll start to understand and probe deeper and deeper. Ask your accountant to explain financial statements and why is this the way it is, and go into as much depth as possible. And combine that with some self-teaching, you should be able to get a solid ground or understanding rather for financial statements and accounting and all that sort of stuff. So ask questions to your CPA. And again, there's so much information out there, especially on LinkedIn. I don't know if you have any other source.
No, I mean, you covered it. There's a variety of free materials available right now. There's a ton of professional service firms that have content out there.
Yeah.
There's some of these firms are on YouTube as well.
Mm-hmm.
We have content on our blog.
Yeah.
But like you said, you need to communicate and be bold enough to ask these questions to your accountant. Because some people think they get a little bit intimidated when they don't want to ask those questions because they might fear that they don't know enough or they're shy. But speaking to your accountant, in the end, you're paying for the service, so you should be bold enough to ask these questions.
And we went into this. I mean, a lot of CPAs went into this profession to help others, right? So no one should be shy because it's very, very difficult to understand accounting, but also run your own business, right?
Now, one mistake is maybe not to get an accountant, but you think about mistakes as things that you then experience 6, 12, 24 months later. So when you looked at or got a client, we're like, oh, we got to fix this. What are some of the mistakes that some of these newer companies, newer startups have made when it comes to accounting?
One major one for me is not planning and not putting in a forecast or a financial model, and kind of going in. I don't want to say blind, but without some form of plan. or modifying that plan way too much and not trying to adhere to what they've built previously, like a budget or something like that, adhering to that financial model. That's a major gap for me. And if you can plan, and stuff might go off the rail, but as long as it requires you to maintain a certain level of focus, right, and trying to stick to that. I think that's a major gap.
What I found with planning and forecasting for me was the exercise, because like as a startup founder, you're like, ugh, this is gonna be obsolete in 3-6 months, and
Yeah.
oh, why should I even do it? Because like things change so much. But for anyone listening, the thing that I found the most value is because things are changing. You now need to know how to make decisions quickly, and you need to understand like the levers that make revenue go up, that make costs go up, that make profit go up or down. And if you do the exercise of planning, forecasting, yes, it may be obsolete. You may have to do it probably once or twice a year.
Yeah.
But the exercise of you thinking through all the variables and all the levers,
That's exactly it.
when it comes to the day to day and stuff's happening, you kind of have a sense of how it's affecting your business, so that you can make smarter decisions that end up making you,
Yeah.
more money, more
I
profit.
mean, you and I have gone through these exercises quite a
Yeah.
bit, but that's exactly it. You get and
It's not that it's supposed to be like a thing that you religiously
no,
follow.
things are going to
It's-
change,
it's
especially
to
in a
help you
startup.
think.
You pivot, something happens, it doesn't work, you got to pivot again. But at least over time, you're going to understand what works and what's clicking out, and it gets better over time. It's going to be a complete mess at the beginning, but at least you have something down and it's requiring you to think about it, right? So over time, the idea is that it gets better and better and better.
What about the tech stack? Because so people can probably get used to using the one that they use. Like I remember when I first got started, like QuickBooks was like the big name, and I was like, this looks confusing and old. I don't want to use it. And then Ryan was like, we're on Wave, and he was like, yeah, we'll start with Wave, and then we'll move to Xero, which is spelled with an X, just like you guys. But tech has evolved so much, probably in the last 10 years. Like I wonder if you were advising a startup, hey, you and your accountants, or you on your own, like here's a good tech stack to make sure it's easy for you to track expenses, receipts, get your financial reporting, and be in a position to scale up, right? Another mistake I find entrepreneurs make is they don't even think their business is going to be big. Therefore, they make all these decisions and actions based on the fact that it is small in the moment. But it's like the whole point of having a business is that you think it's going to be big, so you better put your business in a position to scale up, and accounting has to be thought about. And so what are your recommendations for like a tech stack?
Yeah, absolutely. Well, tech now is even more important than ever, and a lot of business models are mostly online these days. So, implement tech stack. One of the things we do when we talk to a potential client is really understand their business model and how they plan on selling the product or service, and then we basically try and reverse engineer a tech stack that will allow them to do that. So a basic combination is obviously your accounting ledger, your accounting software such as Xero. You mentioned Wave, QuickBooks. There's a plethora of them out there, but that is your basic implementation of accounting software. And then you can tag things on that can integrate with the software, such as, like I said, expense management. If you are invoicing and you're not using the accounting platform to invoice, if you're using something like Chargeify, you can integrate that as well. And then you want to make sure that it's easy for clients to pay you. So you can implement something like Stripe, which also talks to your accounting platform. So we really look at the business operations and see how they plan on operating, and then see if there's a tech stack that we can add on to the accounting platform to help them basically scale, but also make their internal operations easier. And I'm not sure if you want to add anything to that.
No, in terms of a basic tech stack, yeah, but I mean, that's great. I mean, there's Pluto, I guess, as well for accounts payable management, and I mean, you build from there. So if you have your fundamental tech stack, I suppose, to make sure that you're getting paid and you're making your payments and the accounting is tidy. There's also FP&A tools that integrate into Xero, so you can have board or investor reports that are customized. So sort of like you have your base, and then you can stack on top and on top and on top until
Yeah,
You
I
know,
mean, the
you get
cool
what you
thing
mean.
about cloud accounting is that it's an open API, and you can allow different apps to talk to each other, and then consolidate all that information from different sources into zero. So it's very it's actually very quite
And
powerful.
usually it's cost effective as well versus implementing something. I mean, I'm not knocking it, but like Oracle NetSuite or something like that, where these types of ERP systems get very expensive very fast. And what's cool is that you can pick and choose the different technologies that you want to plug in, and over the course of time you can continue to stack on top. And usually it's again much cheaper.
Have you guys started looking into like how AI can help make either your life easier, the founder, the business owner's life easier, either to save time or save costs in all the work that's got to get done when it comes to accounting and finance?
I mean, on the accounting side, it's starting. It has started, but it hasn't taken over anyone's role. For me, as a as a business owner, and I think the same. I can speak for Hassan as well. We're using things like ChatGPT to, generate a staff email or something like that, or maybe improve an email to a client. I'm not sure if you're using any other sort of
Yeah,
AI.
absolutely. I mean, definitely the AI is big right now, especially with the launch of GPT-4. And also, I'm sure you've heard about Microsoft launching I think it's called Copilot, which is interactive AI that is able to kind of, do something as crazy as summarize a financial report into bullet points type of thing. So. Just to touch on Joey's point, I don't necessarily think AI is going to replace accountants, but I do think that that accountants using AI will outshine those that don't.
Mhm.
And in terms of market share for accounting firms, if you don't adapt it, you will lose out on that because it does increase efficiencies
Yes.
internally.
Yes.
I don't think that, at least not in the next, in my lifetime, I hope that AI will replace accountants, because there's a thing called professional judgment
Mm.
that accountants use a lot, and I don't know if AI will be able to get to that point anytime soon.
As long as
Because-
there's no level of consciousness that comes
Correct.
into the AI.
Correct.
There's just so much to consider,
It's
to
evolving
make
at
a
mile a
strategic
minute,
decision.
too.
Because
Correct.
the strategic decision about like how to manage your money comes back to even like the entrepreneur's lifestyle.
Correct.
Their
Correct.
goals. Are they going to raise money? Are they bootstrapping?
Correct.
I still wonder whether me collecting annual subscriptions up front
Mm-hmm.
and scaling the business like I did bootstrapped was a good decision or not. Like in so many respects it was good because I was able to, I took money in early, was able to now reinvest back in the business to grow the business. My GAAP revenue lagged
Mm-hmm.
behind the money I was collecting because it would be a 12th of what money I collected.
Yeah.
So then I was unprofitable from a GAAP perspective for many years, which then so I never actually had to pay taxes as a company, and I'm still earning off my losses now that we're profitable from a GAAP perspective. But then it also there was lots of pros to that approach. But then the downside was my P&L was negative, and that didn't look good for banks
Right.
and traditional lenders. Other investors probably they're like that's normal,
Yes.
so they didn't really care
I
about
was gonna
banks.
say that, yeah.
Which, as a bootstrap company, I now want to make banks happy, and that move made me not have to go to banks for a while. But then now I'm starting to feel it.
Mm.
What are your guys' thoughts on how a company should collect revenue? Do you ever think about that? How they should reinvest their capital versus, save or run their business, more on cash or more on GAAP? Do you have any thoughts around?
That's a multi-tiered question, but I mean it starts with bootstrapped versus VC funded and how you're looking to scale. Man, we can unravel a lot here.
Yeah.
I mean, I just came from a startup, so in my adventures, right, before I came back and acquired Xen with Hassan, I was working at a hypergrowth startup that did exactly that, right? So yeah, you're not profitable from a GAAP perspective, but there are alternative sources of lending that and within the industry that you're in, that investors will say, oh, that's fine, and as long as you can show that there's traction and that there is growth in revenue from a GAAP perspective, which is what was happening with you,
Yeah.
then it, securing or at least speaking to the right people, the right circles of investors, that's the right thing to do. So I have no issue with.
I'd like to
that.
think that was the right thing to do because
Yeah.
of all the benefits of it. I'm just now as a mature company, I'm now feeling it.
Well,
with the banks.
again, it depends. Well, yeah, but the banks will never. The banks don't like to lend. They don't like to lend money to people who aren't making money, right?
Yeah.
Like they're very traditional. They're risk averse.
Yeah.
Right. So going that route, which is why there are VCs out there, and even the BDC will, these different types of alternative lending streams, right? It depends where you want to go and where you want to head as a business.
So let's talk about the companies who do want to grow and raise money.
Yeah.
Because raising money is all about what are you showing the investor.
Mm-hmm. Yeah.
So I want to make my financials look good. I want to make my metrics that they look at for whatever type of company I am look good. And I remember getting into it, realizing, oh, there is, just like you can legally do things to save on taxes, you can legally do things to have better metrics to then show investors. A really common one, especially for software companies, is how do I define my customer to decrease my churn and increase my renewal rate? Because I can call these customers that kind of came and went early trial customers. And so they don't actually count towards my customer churn.
Interesting.
And you're allowed to do that as long as you can justify why these early clients who kind of weren't sticking aren't real clients. And so then this goes to like your tracking reporting, because then you're like, all right, when we get revenue or signups from these customers, call them trials, which then show up in a P&L as well as other reporting, so that if they leave, great, they're not counted towards your reporting churn to investors, because these ones are my current customers who got past this point,
Yeah.
and these ones don't churn as much, so I can now legitimately tell them, yeah, I have 1% per month churn, or
Okay.
whatever. Have you started to get involved in that in terms of like what can companies do to help them raise money, to look good to investors? Is there some best practices or mistakes that people have made that you've seen?
Do you want to take it or?
Yeah, absolutely. Well, I mean, talking about churn, we do work with a lot of SaaS startups, and one of the metrics is churn. How many of these clients are leaving us, and what reasons? So we tend to dive into that to try and understand that with the founder to see where the specific reasons. Most of the time in software, there is a similar type of product out there, right? So it could come down to pricing or features of some sort. So there's multiple reasons why clients will churn. But when it comes to raising capital, well, first you need to determine whether you want to raise capital or not, because raising is great, but you also then create a responsibility to deliver, because your investors want ROI, right? So I would say in the startup community or even the venture capital market, there's this tendency to celebrate raises as if the company is profitable and mature, where it's growing sustainably, which is not the case. And you can look at a company called RenderOne recently in the headlines, where they raised over 200 million. I think it was a year and a half ago, and they burned through it all. They filed for Chapter 11 not too long ago, right? So number one is, do you need to raise money, right? And if the answer is no, then you need to bootstrap it. But if the answer is yes, because you're developing some sort of crazy software that requires a heavy research and development, then the financials is one thing, the quant is one thing, but then the qualitative is another, because you need to sell a vision. You need to sell the vision of the company to the investors, because naturally you won't be profitable in the first 2, 3, 4 years, right? But if you can show them that, well, there's traction by doing a product market fit, a beta testing, and see, well, look, the market wants this, right? I have the team in place, now I need fuel to put into the fire. That's when you want to look at VCs, and you don't want to just go with any VC. You want to go with a VC that has the type of resources that you need, right? Some VCs just want, here's the money, and I'm going to be a silent partner. Some will be hands-on with you and really try to make you, number one, a better entrepreneur, a better founder, but also try and get the company to a sustainable status. So there's obviously a couple of things you need to consider, but in terms of metrics, there's obviously the pitch deck and how you can make the pitch deck attractive, and there's different resources out there to help out. But definitely, you need to first figure out whether or not you need the capital, and if you're willing to let go of control or some form of control. And most entrepreneurs don't like to be told what to do, right? But if you're raising capital, then you might need to give some of that away. So it really comes down to whether or not you want to go that route. I don't know if there's anything else.
Well, there's not too. That's very well said. I think the one thing I'd add is that where we come in is really creating that sound tech stack and with the numbers and recurring monthly internal financial statements that are clean. And when you're talking to investors, the investors will 100% do some form of due diligence. Even if you're Series A downwards, you're still selling that vision and talking about the potential for market traction. Investors are still going to ask for your financials and all that sort of stuff, and where we come in is making sure that all of that is neat and tidy and that answers can be provided when questions are asked. So that's just
and I think that's the most important thing about having your accounting and finance in order, which really is all of your metrics in order, is because as an owner, you should hopefully try to bootstrap as long as you can.
Yeah.
And then all of a sudden there's going to be this need to either go raise money or go get debt.
Yeah.
And then in order to do that, you're going to now need to start networking, and people are going to start asking a bunch of questions, and then you're going to start delivering reports, and eventually a data room, and not just for this one period of time, but then potentially multiple times throughout the life of your company. And you don't want to have to stop growing the business to now get all that stuff ready.
Mm-hmm.
And so I think that's been the thing that I'm happy I did for myself, is I've always been on top of the numbers.
Very good point.
And making sure I'm getting my financials within a very quick. You said you were shocked that I asked for it within 2 weeks.
No, that's exactly it. That's exactly it. And if you're preparing a data room or something like that for potential investors, and there's drags and time lags in terms of when you can get that information up, it kind of looks a bit disorganized.
Well, speed kills the deal.
Yeah.
So you need to be oh, what do you need? Yeah, let me get you the updated version of those numbers, and I can probably get it to you tomorrow, because I just need to get into my software, collect all the information, and then spit out the updated report.
I mean, one thing I was super impressed with, I'm going back into my memory the last time we had a health checkup call, but you had all of your kind of revenue and operational KPIs up to date, and you knew them like the back of your hand. And we come prepared to the meeting with our more of the accounting and finance information that you don't necessarily or haven't necessarily taken a look at, and we dissect that together, and that is the epitome of what we want to have with our clients, right? Where we're talking really high level. All the information is already in there through the background, but now it spits out to these performance metrics, and we can say, okay, well, what do we need to do to make things improve, right?
Yeah.
So that's just a shout out to you quickly.
Yeah, you hear about that on Dragon's Den and Shark Tank. You gotta know your numbers, and I think that's. I have an affinity to numbers, which is why and Amanda too. That's why we stay on top of our numbers and our metrics. But it's one of the best, probably it's a little habit. If you don't stay on top of it, you're gonna feel the pain later.
Yeah.
So you feel the pain short term by always staying on top of your numbers, but it's small little pain compared to the big pain when you all of a sudden you're like, oh crap, I need to develop all these reports. Oh crap, I don't have the data to make this decision.
Yeah.
I remember I was consulting this one company on sales and how to grow their company and be more profitable. And I just started asking them a bunch of questions about numbers, and they're like, I don't know. I'm like, well then I don't know how to have a conversation with you. I don't even know how to help you figure out your strategy, because where are the numbers?
I said this on a previous podcast, is that businesses are stories, right? But that story always translates into numbers, right? So you have no choice but to know what's going on, right? So you got to be proactive in that side of things, because otherwise there's a cash is king, like you were mentioning before. Strong chance that you can run out of cash if you're not making those decisions. So
Is there any? I always love talking about how to save taxes.
course.
Any tips for entrepreneurs on how to prevent audits and save taxes? The two most painful things for a business owner.
Yeah.
Run it and save taxes. Yeah, go. You
Absolutely. Well, I mean, for audits, one thing we do for our clients very well is really audit-proof the file. What does that mean? It means that for any expenses being claimed by the business, we have proper documentation, and that anything we're claiming in terms of either tax credits or sales tax credits is compliant.
Yeah.
So we've audit-proofed that file. So whenever that audit does come up, we're ready to go. So that's one thing that we do, and if you don't have an accountant that's doing that for you, then you can do it yourself. Just make sure that you have proper references and documents saved somewhere.
Yeah.
So that's kind of the audit proofing. In terms of taxes, tax is such a vast realm of technical interpretations. But yes, I mean, ideally, if you are running a business and it's incorporated, small business tax in Canada is 20%, right? 20% in Quebec, sorry. I don't want to get into the technicalities, but yeah, small business rates in Canada are pretty low compared to if you are doing, like a solopreneur that's not incorporated, then you're just paying marginal personal taxes, which is typically relatively higher. In terms of tax tips, there's a lot of tax credits that people are not aware of and they don't claim it. One of which is, like, for example, COVID, everybody's working from home. Are you claiming any home office expenses? That's going to be a tax deduction for your business. So that's one of the tips that I can give today. But obviously, we like to look at the person's personal situation, because tax revolves around.
So as you guys are talking, one of the things that's dawned on me that I'm happy, I'm thanking my past self for thinking of these things, was to not change accountants, because like people would come to me and be like, oh, like we can do it, maybe cheaper. Oh, my other, her dad uses this person, maybe she should go with them, or whatever. It's like some reason why. Oh, you're there in Montreal, you should have an accountant in Vancouver, or wherever I was living, Toronto, wherever I was living. And when you think about audits, as we've been audited, I don't know, 4 or 5 times or more, then all these review engagement for the investors and how to make it look good, all the M&A conversations, all the data rooms, then CRA through wage subsidy and figuring that out and then getting audited for that. We were able to have quick meetings to then figure out a strategy on what to do and how to do it. And you guys were also able to probably figure out what to do and how to do it properly to actually do a good job on all the audits where, it's always passed, we've always saved money, we've always got paid from the government if we had to get paid. That's why they're auditing us a lot of the time, is we're telling them, you owe us money, and they're like, well, we're gonna audit you now. And it comes from, I think, having such a long-term relationship with you guys, where if you have an accountant, the more they spend with your business, the faster and better they're going to be able to help you. And so what have you noticed, like with all of your clients, like the benefits that you've been able to give to them for having a long-term relationship with them?
Yeah, I mean, we don't have what I like to call a pump and dump methodology. We're about sustainable growth with all of our clients, so we want to bring in a new client and really understand the mechanics of their business, how the business model and how it functions and all that sort of stuff, and really get a full understanding of where things are headed, how things work and all that, and why. is because, well, it's beneficial for us to some degree because we also want to grow the plan and grow our revenue. There's no hiding that. But in order to provide those higher level services, you need to have a deep, meaningful understanding of the business. Because if you're providing advice and you don't have any idea what's going on in the business, well, you're going to pick up on that as a business owner. If you're going to talk to me about your business, I better damn well know everything about it so that you're taking my advice, right? And you continue to take my advice. So I think that's one of the main things that's important about an accounting relationship.
Even just to say that, because I know how your firm works, is like, if I was to hire an accountant to do work and then not talk to them, and then hire them again, or hire a different one to do this audit, or hire a different one to do this M&A planning, that would probably take more of my time to teach that person about, to help that person learn about the business that I'd be paying for.
Yeah.
I'd be paying both in my time and my money to have to reteach things to different accountants and stuff like that. And then if I want to scale up my services, say I all of a sudden now needed a CFO, I could potentially not get a person who's good because they haven't had any history of doing a good job with my finances.
Yep.
And then I potentially don't need a full-time person. And so then I'm now wasteful in money for potentially hiring a full-time CFO. I don't even need one. And so for the model that you guys have, like the return does get better the longer you stay with it, because then I can scale up. Oh, I just need this much more. And so then I'm just paying for that extra.
Yeah.
And so give people a sense, you start with basic bookkeeping, then they'll probably progress to this, then what are the different progressions?
I mean, Hassan probably has a similar opinion, but I always say to anyone that we're potentially going to take on as a client is that we like to start really at the basics. We offer the bells and whistles package, right, from right away, and if that we've closed some clients that are like that, but start with the fundamentals, get onboarded, get onto your tech stack, allow our team to do those deep dives, understand the processes, document the processes, run through a few quarters or cycles. Okay, now we have the fundamentals. We know exactly how the business works. Okay, let's layer on top. Accounts payable management is one thing that I can think of, right? So allow us to make sure that payments are being done on time, everything reconciles, your payables balance is accurate, you're not forking out extra cash for duplicating payments. So accounts payable stacking on top is usually a service that we see as well. I'd say right after that goes into advisory, right? So I talked about planning is essential. In order for us to give you the best possible financial model or budget, it's always good to have a little bit more experience in getting that in-depth understanding. So on top of the accounts payable management is how I like to call fractional controllership or fractional CFO, where we'll help build you a financial model, maybe some scenario analysis, right? And then we hop on calls to do budget to actual variance analysis and those sorts of things. So that's usually the evolution and how you see things evolve over the business life cycle with our clients. I don't know.
That's definitely it's all about right. So I mean, with, like I said, different plans. If you just started up, you probably need just basic compliance. That's where it's low maintenance. You'll speak to us, maybe a couple of times a year. But then as you ramp up, like most startups do, then you're hiring like 20 people. So then you might need payroll. So that's like another incremental increase. And then you basically ramp up to fractional CFO or virtual CFO, where you actually have call it a part-time finance person that you can reach at the finger of your tips, and essentially leverage that knowledge. And because our team is handling the day-to-day stuff, the day-to-day books, when a manager or a CPA comes on board, well, we have that data as well as that understanding of the client that kind of flows through into the call it the advisory level services. So yeah, essentially you move from one plan to the other, and it's usually incremental increases. So it's not as if you're hiring somebody full time and there's wasteful resources there, as you mentioned.
Yeah.
And what are the kinds of clients you guys give people a range of like type of businesses and entrepreneurs and startups?
You take that one. You.
Yeah. So I would say 70% of our clients are tech startups, either software as a service or some form of platform building, some sort of innovative technology. So we have clients in SaaS businesses, fintech. We have clean tech. We have biotech. So the majority of our clients are in technology in one way, shape, or form. The rest, I would say, is usually service type of industries. So service businesses, coaches, consultants, professionals, lawyers, real estate professionals, medical professionals, and then we have a small percentage of that's e-commerce.
Cool. And so if people want to get in touch with you guys, how can they do so?
I got this fancy new OVU card that I can scan on your phone, but
Oh yeah.
but XenAccounting.com is probably the best route. Or reach out to us on social media. We're on LinkedIn, Facebook, Instagram. But if you go to our website, you can read all about us, what we're all about. We're one of the first mover firms in Canada, so that gives us a pretty cool edge. But book a call, discovery call. It's pretty easy. You fill out a form, and either Hassan or I will reach out, and we'll hop on a discovery call and go through the motion.
As you guys know, for Startup Grind Kelowna, it's a non-profit thing for us, and we don't want to just have like a really basic event. We want them to be awesome with food, with drink, with prizes, with great speakers, with a great venue, with good seating and audio, video, and recording and live stream and all this stuff to help bring the business community together in the Okanagan, and also just teach entrepreneurs who can't even attend the event about how to grow their business. So we need sponsors like Xen Accounting to make these things happen. So thank you guys so much for sponsoring the event. And if you guys need accounting services, again, they've done an amazing job for me. And I think, how much do you value your time? How much do you value no stress? How much do you value no headaches in this area of tax, audit, finance, accounting, all that stuff? I think that's been the most valuable thing that I've received from them. Because when you have a clear, de-stressed mind, you can actually think about how to grow your business.
There you go.
There you go.
So thanks you guys for being awesome.
Thanks for having
for
us.
me.
Yeah, absolutely.
Appreciate you guys being on the show, and check out our Instagram, Startup Grind Kelowna, to see when the next events are. Register for them, come to them, share them with your friends, and until next time, keep on grinding. Bye-bye for now.
Thanks.
Thanks, guys.
That was awesome.
Yeah,
Sweet.
cool.
Awesome. Thanks, guys.
Thank
Yeah,
you.
no, thanks for having us.
That was fun.
Yeah.